Palantir just reported earnings and the stock dropped about 14%. At the latest share price, the company has a market cap of $51.4 billion with $3.9 billion of cash and investments and no debt. The enterprise value is just under $48 billion. Revenue over the last 12 months comes to $2.3 billion with $300 million of net income and $640 million of free cash flow. So Palantir stock is currently valued at 20 times revenue, 173 times earnings and 74 times free cash flow. Since Palantir went public, it's had its fair share of critics. Bears initially argued that Palantir was more of a consulting firm than a software company, but Palantir quickly disproved that thesis by growing its gross margins well past 80%. Next, Palantir was accused of being too reliant on government customers, which would hit a natural ceiling in the US, and more lately critics have argued that Palantir is not a real AI company. But once again, Palantir has proven its critics wrong. Commercial revenue growth in the latest quarter accelerated to 40%, and the company added 41 new commercial customers. Full year guidance was raised to incorporate a 45% increase in annual commercial revenue, and this growth is being driven by Palantir's AI product, AIP, with its successful bootcamp sales strategy. Customers are clearly benefiting from the software, and CEO Alex Karp said on the latest earnings call that there's no one who can compete with AIP in the US commercial market. Impressively, while Palantir revenue grew 21% in the latest quarter, total operating expenses climbed less than 6%, boosting operating profit, and another quarter of profit means that the stock should soon be added to the S&P 500. But despite Palantir's successes, an investment in the stock isn't guaranteed to produce an adequate return. Based on a discounted cash flow model that assumes a 30% free cash flow margin and a terminal growth rate of 3%, Palantir would need to grow annual revenues about 25% a year for the next 10 years to generate an 11% annual return. That sort of performance is possible, but it's far from guaranteed. Palantir's business is a high quality one, but the lack of margin of safety merits a neutral rating. But these are my personal opinions, not financial advice, and I do hold a small position in Palantir stock. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.